Dear friends, today we are talking about IND-AS 24, IND-AS 33 and IND-AS 108. These are the standards we are going to talk about in deeply and elaborately to our fraternity, and we'll talk those. Dear friends, dear friends, this is, dear friends, here I am to talk about certain standards. What are, what are those standards? Especially, my dear friends, here I want to talk to you especially few standards which those speaks about IND-AS. Basically, these IND-AS we are talking to here IND-AS 24, IND-AS 33, IND-AS 108. These are the standards we are planning to hear and to talk about those standards and to discuss with you, my dear friends. The subject matter of IND-AS 24, 33, 108 speaks about, just 1 minute, my dear friends. Actually, these are the simple standards, my dear friends. You need not to worry more about discussing these standards. These are very simple standards. I am going to talk elaborately on those standards. Just 1 minute. We'll take pen, paper and everything, and then we'll start to discuss. Dear friends, I would like to discuss about few standards. What are those standards I told you? And during our discussion, you must have one pen and paper, because during the discussion, we are going to solve few problems also there, and we are going to talk about the problems also. Especially today, our target is IND-AS 24, IND-AS 33, IND-AS 108. What are those standards? Basically, these standards are few standards. There will be no much content. You need not to worry out also. IND-AS 24 talking about related party disclosures. And IND-AS 33 is talking about earning per share. India's 10 talks about operating segments. These are very easy standards and you will not have any confusion. First, let me start India's 24 related party disclosure 14.1. Dear friends, the moment you come to the related party disclosures, you need to understand what is the definition of relative. So, the definition of the relative, either directly or indirectly, by controlling or by managing the board affairs, or by way of contribution of equity share capital, or the substantial borrowings, or substantial debentures, these kind of things. We'll see the one by one. For example, I'll talk about one question. You see that you decide that whether it comes under the related party or not. My dear friends, Mr. X having Mr. X has 100% of investment in A Limited. He also member of the key management personnel of the C Limited. B Limited has 100% of investment in C Limited. Required, examine the related party transaction from the perspective of the C Limited for A Limited. Dear friends, here Mr. X is what happened. Mr. X, 100% of investments in A Limited. And he also a member of the key management personnel of C Limited. B Limited has 100% investments in C Limited. See, Mr. X, 100% investments in A Limited. He also member of the management personnel, key management personnel of the C Limited. Now, B Limited has 100% investment in C Limited. Now you tell me, A, B, C are related party or not? Dear friends, by the moment you check here, what's happening? A limited is related to C Limited because Mr. X controlling A Limited and is a member of the key managerial personnel of the C Limited. Now, Mr. X is 100% investment in A Limited and key management personnel of C Limited. And now B Limited investment to C Limited. My question is, now C Limited and A Limited are the relative or not? Yes, relative. Because 100% of the shareholder of the A Limited is a key managerial person in the C Limited, right? Now C Limited and A Limited is relative or not? Yes, relative. Yes, relative. Now, still A Limited will be related to C Limited. Mr. X, 100% investment in A Limited and he is a key managerial person of the B Limited. Now, Mr. X is related to AB. That's why the relationship from the C limited for A limited means X is a key MP of the B limited and not the C limited. So okay. Now my question is, will the outcome of A and B would be different from Mr. X is a joint control over A limited? No. Still A limited will be related to the C limited. Dear friends, A limited joint control of Mr. X. Mr. X is a joint control of A limited and C limited. Now B limited invests into C limited. This is the reason this outcome would be different. Mr. X's joint control. No, same. Now, in case, will the outcome of A and B would be different if Mr. X has significant influence over A limited? Yes, sure. Why? A limited is not controlled by Mr. X. Therefore, despite Mr. X being the key MP of the C limited, A limited having a significant influence of Mr. X will not be considered as related party of C limited. Okay, friends, let's leave that question. And tomorrow we'll have one more discussion on this question. We'll discuss at the time, at the point of time. Now we are going to talk about completely on question number 2. This question number 2 is talking about, for example, a government G directly control the entity 1 and entity 2. If indirectly control entity A and entity B through entity 1 and entity C and entity D through entity 2, person X is a member of the key management personnel in entity. Examine the entity to whom the exemption for disclosure to be given and for transaction with whom. For entity, a financial statement, the exemption of Ind AS 24 applies to a transactions with the government G and transaction with entities 1 and 2, entities B, C and D. However, that exemption does not apply to a transaction with the person X. The government G, a key managerial person of Mr. X, entity 1, entity 2, direct control, and entity 1, entity A, entity B, entity 2, entity C, entity D. This is what answer. Who are watching my YouTube channel? Dear friends, if you have a doubt, as you can ask me the question, you can call me through our WhatsApp. I'll answer. If I'm not answering now, I can answer later also, because to do series is going on. That's what. Friends, let's go for discussion. What I want to tell you here. Friends, now I'm going to talk about question number 3. The question number 3 is like this. What is it? What it is? You read, see, understand. An Indian company has a parent company outside India. Parent company negotiates the software license with end vendor and based on number of licenses. Parent company get its reimbursement from Indian company, say license cost of rupees 12 lakhs is charged for calendar year. Parent company generates his invoice in February. Indian company accounts full invoice in February, and then for Indian financial year account reimbursement expenses 3 lakhs during the financial year for licensing cost relating to a period of January to March, and prepaid expenses of rupees 9 lakh for licensing cost reimbursement relating to April to December. Prepaid expenses is subsequently reversed, and expenses of rupees 9 lakh is accounted for in the next financial year. What amount what amount should be disclosed at related party transaction? What amount should be disclosed at a related party transaction? This is the question, my dear friend. Now we are going to solve that question, my dear friends. Friends, I would like to talk about aspect principle treatment. In our discussion, first the aspect we'll see, based on that what principle is talking, and based on that what treatment is going on. These must three we must have aware of it. So meaning of impact of the financial statement, what is the principle? A related party transaction is a transfer of resources, services, or obligation between a reporting entity and a related party, regardless of whether a price is charged. A related party relationship could have an effect on the profit or loss on a financial position of an entity. So the treatment is, there is a transfer of resources to the extent of rupees 12 lakh from the company to the parent towards software license of this transfer. Company has consumed the benefits relating to rupees 3 lakhs, which is recognized in P&L account. The benefit relating to 9 lakhs will be consumed in the next reporting period. It is recognized in balance sheet as a prepaid expense. For example, if you take disclosures, regarding to disclosure principle is nature of the related party relationship, amount of the transactions, amount of outstanding balances including commitment, the terms and conditions including whether they are secured, and nature of the consideration to be provided in settlement, and details of any guarantees given received. Provision for doubtful debts related to the amount of outstanding balances and expenses recognized during the year in respect of the bad and doubtful debts due from related parties. Friends, you need not to worry on anything while we are reading. Friends, sorry, in between of my discussion, I deviated 2 minutes because of flight 3 or should we put 2 or like that. It's okay. Our life, our studies is more important than any other thing. And we will continue to repeat things. Okay, let's go for it. Friends, with respect to this, what disclosures are required? The disclosures part is nature of the related party relationship. I'm talking about principle, amount of the transaction, amount of outstanding balances, including the commitments, their terms and conditions, including whether they are secured, and nature of consideration to be provided in settlement, and details of any guarantees given or received, provision for doubtful debts related to the amount of outstanding balances, and expenses recognized during the year in respect of the bad and doubtful debts due from related parties. For this, what the treatment is required? Therefore, the company has to disclose the amount of transaction with the parent of rupees 12 lakh towards software license, outstanding balance of rupees 9 lakh presented as prepaid expenses along with the terms and conditions, and state that the same will be settled in the next reporting period by receipt of software licensing services. The amount of 3 lakhs recognized as a software license expense in profit or loss for the benefit of consumed during the period to make it understandable of users. But whereas aspect of India is one, the presentation as a principle, the entity shall present notes in a systematic manner. An entity shall cross-reference each line item in the balance sheet, and the statement of PRL, profit or loss, not profit and loss. PRL is a statement, not a profit and loss account statement. If PRL, profit or loss, that's it. That is a statement. Profit or loss statement. An entity shall present notes in a systematic manner. An entity shall cross-reference each line item in the balance sheet and in the statement of P or L and in the statement of changes in equity and cash flow statement to any related information in the notes. The treatment is therefore the company shall cross-reference the software license expenses recognized in profit or loss and prepaid expenses recognized in the balance sheet to the notes disclosing related party transactions. What? Disclosure related party transactions. Understand, my friends? Yes, you might have understood. Now, let's go for question number 4. In this question, the question is talking about ABC Limited is a long-standing customer of the XYZ. Mr. P, whose husband is a director in XYZ Limited, purchased a controlling interest in entity ABC Limited on 1st June 2017. Sales of products from XYZ Limited to ABC Limited in the 2-month period from 1st April 2017 to 31st May 2017, total rupees 8 lakhs. What? 8 lakhs. Following the shares purchased by Mr. P, XYZ Limited began to supply the product at a discount of 20%. The normal selling price and allowed ABC Limited 3 months credit. Previously, ABC Limited was allowed 1 month credit. As per XYZ Limited, normal credit policy, sales of product from XYZ Limited to ABC Limited in the 10-month period from 1st June 2017 to 31st March 2018 totaled 60 lakhs. On 31st March 2018, the trade receivables of XYZ Limited included rupees 18 lakhs. In respect of amounts owing by ABC Limited, analyze and show how the above event would be reported in the financial statement of XYZ Limited for the year ended 31st March 2018, and also mention the disclosure requirement as per Ind-AS. XYZ Limited would include the total revenue of rupees 68 lakhs, 60 lakhs plus 8 lakhs from ABC Limited received, receivable in the year ended 31st March 2018. Within its revenue and show 18 lakhs within trade receivables at 31st March 2018. Mr. P would be regarded as a related party of Mr. XYZ, related party of XYZ Limited. Dear friends, XYZ Limited would include the total revenue of the 68 lakh from ABC Limited received. The receivable in the year ended 31st March 2018. Its revenue shows rupees 18 lakhs. Within the trade receivable 31st March 2018. Mr. P would be regarded as a related party of the XYZ Limited because she is a close family member of the one of the key management personnel of the XYZ from 1st June 2017. ABC Limited would also be regarded ABC Limited would also be regarded as a related party of the XYZ Limited because from that date ABC Limited is an entity controlled by the another related party. Because ABC Limited is a related party with whom XYZ has transactions, then XYZ should disclose the nature of the party relationship, the revenue of the from 60 lakhs from ABC Limited since 2017, and the outstanding balance of 80 lakhs 31st March 2018, and the current circumstance. It may well be necessary for XYZ Limited to also to disclose the favorable terms under which transactions are carried out. Friends, there are few questions which are so easy, and we are going to talk about those clearly and elaborately. This section is very easy. This CDS is very easy. What the CDS is speaking about related party disclosure, that's it now. Wherever you have existence of the related party transaction, you should have made disclosure. That's it. And any other important terms and conditions we are talking, and we also make you learn that. Friends, here Mr. A is an independent director of a company X Limited. He play a vital role in the management of X Limited and contributes in major decision making process of the organization. X Limited pays sitting fees of rupees 2 lakhs to him. For every board of director BOD meeting he attends throughout the year, X Limited had 5 such meetings, which was attended by Mr. A, and similarly, non-executive director Mr. N also attended 5 board of directors and charged 1,50,000 per meeting. The accountant of X Limited believes that they being not the employees of the organization, their fees should not be disclosed as per the related party transaction in accordance with the IND AS 24. Examine whether the sitting fee paid to independent director and non-executive director is required to be disclosed in the financial statements prepared as per NDAs. Yes. Friends, I would like to talk here according to NDAs 24. A related party disclosure is a key management personnel or those persons having authority and responsibility for planning, directing, and controlling of the activities of the entity. So, directly or indirectly, including any director, whether executive or otherwise, of that entity. Accordingly, key management personnel includes any director or otherwise of that entity. Accordingly, key management personnel includes any director of the entity who are having authority and responsibility for planning, directing, and controlling the activities of the entity. Hence, hence, independent director Mr. A and non-executive director Mr. M are covered under the definition of the key managerial personnel in accordance with IND AS. Also, friends, sorry for interpretation interruption to discussing about my family personal matters. Sorry for that disturbance too. Let's go for discussion again. India's 24. As per India's 24, related party disclosures are the key management personnel or those persons having authority and responsibility for planning, directing, and controlling the activities of the entity directly or indirectly, including any director, whether the executive or otherwise, of that entity. Accordingly, key management personnel include any director of the entity who are having authority, responsibility for planning, directing, controlling of the activities of the entity. Hence, independent director Ms. A, non-executive director Ms. N are covered under the definition of the key management personnel in accordance with the NDAS. Understand, friends? Very, 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 very important. It's so much important. What is that important? A key managerial personnel, including director, independent director, or the related party to the company. Understood? Also, as per NDAS 19, employee benefits, an employee may provide service to an entity on a full-time, part-time, permanent, casual, or temporary basis. For the purpose of the standard, employees include directors, management personnel, so they should not be reported as a related party. Therefore, contention of the accountant is wrong. Yes, wrong. Why wrong? He is talking about India's 19, the employee include directors and other management personnel. But whereas come to India's 24, they are the related party. You should disclose them with them transactions. India requires a disclosure about employee benefits for key management personnel. Therefore, an entity shall disclose the key management personnel compensation in total, disclosure of the director fee of 10 lakhs, 7 lakhs, 50 lakhs, something like 50, to be made as employee benefits under various categories. Since short-term employee benefits are expected to be settled wholly before 12 months after the end of the annual reporting period, in which the employees under the related services, the sitting fee paid to director will fall under it as per India's right. Since short-term employee benefits are expected to be settled wholly before the 12 months after the end of the annual reporting period, in which the employee render the related services, the sitting fees paid to director will fall under it as per IND-AS 19 and is required to be disclosed in accordance with the paragraph 17 of IND-AS 24. Paragraph 17 of IND-AS 24. Dear friends, let's come back to the question number 6. How many questions are there? Yes, very few. 6 plus 9. Oh, three more questions. Yes, complete. We'll complete now. Dear friends, let's go back to discussion of another question. Entity A owns 30% of the share capital of the entity B and has the ability to exercise significant influence over it. Entity B holds the following investments: 70% of the share capital of its subsidiary, entity C, and 30% of the share capital of the entity D, with the ability to exercise significant influence. Entity A transacts with the entity C and D. Should entity A disclose these transactions as related party transaction in its separate financial statements? Also, explain the disclosure of such transactions in the financial statements of C and D as related party transaction. Entity A should disclose its transaction with the entity C in entity A's separate financial statements. Entity C is related party of entity A because entity C is the subsidiary of the entity A's associate entity B. Entity A management is not required to disclose the entity A as transaction with entity D in its financial statement. Entity D is not a related party of the entity A because entity A has no ability to exercise the control and significant influence over the entity D. Entity C is required to disclose its transaction with the entity A in its financial statements because entity A is related party, entity D is not required to disclose the transaction with the entity A because they are not related parties. Dear friends, let's go for discussion of another question. The question is like this. Mr. X owns 95% of the entity A and its director. He is also a beneficiary of the trust that owns 100% of the entity B, of which he is a director. Whether entity, whether entities A and B are related parties, would the situation be different if Mr. X resigned a director of entity A but retained his 95% of holding? Mr. X resigned a director of entity A and B and transferred the 90% of holding in entity A and to the trust. Dear friends, in this discussion, I would like to talk about this. A limited and B limited are the related parties because why? The director of Mr. X control A limited and it is a member of the key management personnel of B limited. Mr. X continue to control A limited through his 95% holding, even though he is not a director of A limited and B limited are related. If Mr. X controls the trust of Mr. X control A limited and also through the trust control B limited, A limited and B limited are controlled by the same person and so they are related parties. Mr. X might still be a member of the key managerial personnel even though he is not nominally a director of limited. Key managerial personnel includes but is not restricted to a director, which include those who are executive or otherwise, provided they had authority and responsibility for planning, directing, and controlling the activities of the entity. Hence, A limited and B limited are related parties. If Mr. X, being a member of the key managerial personnel of A limited, controls A limited. If Mr. X control the A trust, he control A limited and B limited through the trust, so they will be related parties. Mr. X is a member of key managerial personnel of the two entities. If as seems likely, he continue to direct their operating and financial policies. The substance of the relationship and not merely the legal form and should be considered. If Mr. X is regarded as a member of key managerial personnel of say A limited, B limited is a related party because he exercised control or significant influence over the B limited by virtue of his control over the trust. Dear friends, I would like to move to the next question that's called question number 8. We will talk about question number 8, which is very important. One of the directors of Build Well Limited, Mr. Bean Johns, has informed the Central Finance team that on 1st January 2003, his spouse acquired a controlling interest in one of Build Well Limited, a major supplier's conductor Condor Limited. Miss John seemed to think that this would have Implications on the financial statements of the Buildwell Limited. Buildwell Limited has been purchasing goods from the Condor Limited 1.5 millions per month of the year ended 31st March 2003. As per the financial statement of Buildwell Limited, this is a significant amount while checking all the purchases transactions. It was found that all the purchases from Condor Limited were made at normal market rates. How the effect of acquisition of controlling interest in Condor Limited by Mr. Ben Jones is to be reflected in the financial statement for the year ended 31st March 2003. In accordance with the India's 24, related party disclosures effective 1st January 2003, a Condor Limited would be regarded as a related party of the Buildwell Limited. This is because Condor Limited is controlled by the close family member of one of the Buildwell Limited key management personnel. This means that from 1st January 2003, the purchases from the Condor Limited would be regarded as the related party transaction as per the provisions of the India's 38, as per the para of the 18 of the India's 24. Transaction with the related parties need to be disclosed in the notes to the financial statement together with the nature of the relationship. It is irrelevant whether or not these transactions are at normal market rates. As per 23 of the standard, disclosures that related party transactions were made and terms of the equivalent to those that prevail in arm length transactions are made only in such terms can be substantiated. The disclosure is required to state that Condor Limited, controlled by the spouse of a director, supplied goods to the value of 4.5 million, 3 into 1.5 million in the current accounting period. Friends, I would like to talk about next question, the question number 9. What I'm going to talk here, Mr. Y father owns 100% of the share in A Limited and Mr. Y Limited, and Mr. Y own 100% of the shares in B Limited. Mr. Z, who owns Mr. Y's sisters, provide bookkeeping service from time to time to B Limited. However, Mr. Z is not an employee of the B Limited, has increased its loan 1 lakh 50 to B Limited to 2 lakh during the year, for which A Limited charges below the market rate of interest. Market rate of interest. State whether Mr. Y fathers and Y sisters are related party of the B Limited. What disclosures is to be made in the financial statements of both A Limited and B Limited with respect to the loan given by the A Limited to B Limited? Whether 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 B Limited is required to disclose the dealings with the sister of Mr. Y, sister of Mrs. Y, in its financial statement. In its financial statements. Father of Mr. Y influenced Mr. Y and Mr. Y and Mrs. Y, and he controlled A Limited and given loan to B Limited. Bookkeeping services, Miss Z, sister of Mr. Y, not an employee. Mr. Y, father and Mr. Y, sisters are related parties of the B Limited. if they are close family of the member, close family of either Mr. Y or Mrs. Y, they are close family, they might be expected to influence or to be influenced by Mrs. Y or Mrs. Y. In their dealing with B Limited, Mrs. Y father and Mr. Y and Mrs. Y, Mr. Y and Mrs. Y are close family. So, Mr. Y father is a related party of the B Limited, which is controlled by Mr. Y and Mrs. Y. Mrs. Y father has a controlling interest in A Limited. A Limited. A Limited is a related party of the B Limited. Both the entities should disclose the necessary details of recording the increase in the loan of rupees 2 lakh in their financial statements. A Limited should also disclose the amount due from B Limited on the balance sheet date, together with any provisions and amounts written off B Limited, should disclose the amount that it owes to A Limited at the balance sheet date along with the concessional rate of interest at which the loan was given to B Limited. B Limited would have to disclose the transactions with Mr. Y, a sister, if the sister might be expected to influence or to be influenced by either Mr. Y or Mrs. Y in their dealings with the B Limited based on further facts of the case. In the case of influence exists, disclosure to be made as per paragraph the 18th of the India's 24 about the transactions and the outstanding balances. Friends, thank you very much. Next, after few minutes, we are going to step in India's 33 earning per share. We'll talk there a lot calculations. Kindly take break 10 minutes. Thank you guys. Thank you very much. Bye bye.